We had Matt Hogan of Bitwise on last week, declaring that the 4-year cycle is dead. My response was, this is very near and dear to my heart as a Bitcoiner. I've lived by the 4-year cycle. I have kind of planned economically around it, right? Thinking sort of when to kind of and how to plan my financial life. Do you agree? And it sounds like you do agree that the 4-year cycle of Bitcoin is a thing of the past.
Absolutely do not agree. And
Okay.
I think that when I heard, Matt talk about that, I thought he was selling his book, because obviously if you're a retail investor and you want to go and put your IRA money into Bitcoin, it sounds very comforting if all of a sudden going forward, there'll be no down years. It's all going to be like, 10% up every year forever. And that's just not how markets work. I mean, we're still pretty nascent in this space. We have less than 5% of the people in the world who have any Bitcoin whatsoever. And that's still early in the market. We went up 100x from the first halving and then dropped 85%. We went up, 30x after the second halving and dropped 83%. This in 2020, we ended up going up 8x. I thought we were going to do 10, but we ended up, because of bad macro, going up 8x, which is still pretty good for an asset class in a little over a year. Gold would have been happy with it. Stocks would have been happy with it. And then we dropped 75%. So I'm projecting that we're going to go about 3x from the halving, 130, 10, 3, this sort of logarithmic diminishing returns. But you don't go from that and all of a sudden go from, 85% loss, 83%, 75, and all of a sudden goes to zero. It just doesn't happen in markets that way.
I'm glad that you're mentioning this. This is something that I've been trying to put forth, that essentially market cycles are all the same, right? It's psychology. It's just the exuberance of investors, which will naturally be created. And I've used that same data point as well. Maybe not those same numbers, but essentially, I'd said if Bitcoin only declined to 60% from its peak from this market, that would be a huge improvement and a sign that volatility is decreasing, right? So maybe we have to let Bitcoin be Bitcoin and just be happy with an incremental improvement like that. And maybe that means it goes up to 150, 200,000 and you see a 50, 60% correction. That's just maybe how Bitcoin works at this early stage.
That's pretty much what the data says. And I spent a lot of the last couple of years, and particularly the year that I ended up writing the book, going over the charts, going over the graphs, going into, Glassnode and all the other data, aggregators, and just really looking for things that I might have missed or looking to confirm things that I thought were true. And most of it confirmed what I already believed. Once in a while, I had a few surprises, but for the most part, I'd say that the data is getting clearer every cycle. And sure enough, I mean, we're on track to do about 3x. In my opinion, I mean, this is looking very much like 2017. It's not a double bubble year like 2013 or 2020, 21. But, I'm projecting that we're going to go up 3x from the halving price, which would be about a 193K, plus or minus macro. So it seems like macro without the super cycle effect, which I'll get to in a minute, is about plus or minus 20. You didn't really have too much of a variation on macro in 2013 or in 2020, but you sure ended up having that in 2013 or 2017, but you sure had it in 2020, 21, because you ended up having this rapid rise in interest rates right when we were looking to maybe approach 100,000. I thought 10x from 8,700 would have put us around 87,000, and a lot of retail would FOMO in to hit 100,000, and then they get wiped out just like they did when they FOMO'd in at the 2013 and 2017 peaks. That's just how retail reacts.
So just so I can spit it back and make sure we're tracking. So it sounds like we agree on the 4-year cycle thesis. Your view, 2017, and it was really just propelled by good macro environment. 2021, diminished macro environment. 193, you're projecting for the top because you expect more headwinds from interest rates and things like that going into the
So
end of this year.
I'm projecting 193 as a 0 negative, 0 positive. So in other words, if the positive things of the really the tailwinds that we're getting from better regulation in the U.S., et cetera, are offset by worse regulation and sort of fear of crypto, and obviously China's been that for a while, but the MiCA and the EU now have been sort of negative, but also just the the macroeconomy in terms of the stock market, in terms of like, every time that Trump uses the word tariff and changes what he said a week earlier, the stock market goes down and crypto goes down. I mean, literally after this last tariff readjustment, we were at fear instead of greed, even with $114,000 Bitcoin, which was sizably up from where it was in April at 75K. We were still at like a 48 fear and greed, which is crazy. And so, fear and greed is driven by retail, and it's based on the CNN Money Fear and Greed Index that was for the stock market, and they, kind of like changed a few things. They looked at, items like that I don't think are wholly accurate this cycle, about like number of people watching crypto YouTube, crypto Twitter, etc. I think that the new retail this time isn't degens buying Doge. It is 45-year-olds hearing from their financial advisor that they should now be putting 1 or 2% into an ETF. And so they're not then immediately going on to TikTok and watching crypto banter. They're going and just looking up in their Charles Schwab account and saying, should I buy an ETF or should I buy MicroStrategy? They're just looking at different things, and I think that affects the way that fear and greed is calculated a little bit. Retail is coming back, but it's more mature retail.